85% of the global baseload energy in the world comes from fossil fuels, or thereabout. I heard 82%. 10% comes from nuclear, 5% from renewables. And when you think about it, how do you get 85% of fossil fuels into 5% renewables, which kind of is the way, start my video. This looks good. There we go. You can see me.
Oh, yeah, you're looking good.
Hello, everyone. So that's essentially the problem with how things have been set up. Europe is in the midst of an energy crisis. So so nobody doesn't want to stop pollution. Nobody wants to see the world burn up. But the assumption that we can just transfer all this fossil fuel power into renewables clearly wasn't working even before the Ukraine. Some people would say, no, it happened. They were already having power problems in Europe before February 24th. So today we're in an energy crisis. And I think people should remember that UN sustainability goal #1 is end world poverty. #2 is end hunger. And if you're having a global recession and significant fallout from this energy crisis, some people would say, look, you can die today or you can die in 40 years, pick your poison. And I think it's obvious what most people would want to do, but there's a big entrenched, I would say, infrastructure and thinking, but it's being rethought. Vivek Ramaswamy, who is a anti-woke writer and money manager, lawyer, he wrote Chevron this week as an activist saying, you guys have to try to maximize value for shareholders. We're shareholders. And what you've done with following ESG direction is you've put yourselves in a hole and you're creating a lot of problems and you need to rethink this. So this is a very real topic. I think there's a Chinese expression, within chaos, there is opportunity. I think that there's an enormous opportunity for the transition going forward. I think that's where the next growth leaders in let's say stocks will be. And so what we're going to do is we're going to have the 5 speakers speak for 7 to 10 minutes and then take questions. The first is Sarah Gieske. Sarah, please raise your hand. There, I thought that was you. Sarah is a classically trained investment banker who works at Kayne Anderson. Kayne Anderson has been a leading energy asset manager. She can tell you a little about it. And then we'll have, next speak will be Nick Rohleder, who is a brilliant guy. He's an adjunct professor at Columbia. He comes from Oklahoma, an oil family, and has all the credentials in terms of ESG and climate. He is a co-founder of a company called Climate Technologies. We have Kyle Fox. Kyle, you got?
I do not see Kyle.
She said she got in. I'll try to when I
maybe this is. I'm gonna see. This is her. 1 second.
Kyle Fox is a principal at K Fox Capital, and she's raised about 75 billion in debt and does all sorts of structured business advice. She's an international player, has worked in the UK, in Asia, as well as in the US. Steve Casey is a brilliant investment manager, banker, and formerly was a managing director for renewable energy at the Aberdeen Group. He also worked for TAG Energy Partners, also in the renewable space. And then we will end with Louis Medina, who is a strategist over at CMG. He's a great market analyst. And we have Kyle Fox. Welcome, Kyle. Sorry if I butchered your bio, but due to some energy problems down here, my video didn't come up and I was a little distracted. But I think we're all up and running. So what we're going to do is I'm going to try to stick to a 7 to 10 minute hard stop so we get everyone done. Let's stick with 7 because we're hoping to get it accelerated, but again, the power problems kind of delayed us a little bit. So Sarah, would you go ahead and tell us about the history of Kayne and what they're doing as we see these two imperatives, the energy crisis and the climate problem resolve themselves going forward, and where you see interest?
Sure, and thanks Marty, and thanks Tyson for having me, and welcome to my other fellow panelists. So Kayne Anderson, really, if you're unfamiliar with, we manage about 34 billion, and we started investing in energy infrastructure. So we kind of made a name for ourselves in the early 2000s, investing in MLPs. So by that, I mean master limited partnerships. They were typically refiners, typically like midstream the best. We felt like they were the least volatile. They had nice yield because they had the tax benefit. So we viewed them as income plus growth. We grew that business. And then in 2013, and we're a public long only investor. So in 2013, we started investing in some of the renewable energy infrastructure companies, just in our carve outs of the traditional funds that we managed. And so in 2017, a couple things were going on that we decided to dedicate a strategy to it. So one is we figured out that we were in the beginning of this mega trend that was not going to go away. So people ask us, what inning do we think we're in? We think we're still basically in batting practice. And then costs of solar and wind have come down in the past 10 years and are now the most cheapest form of electrification. And then the investable universe for us was big enough to dedicate a team to it. So it was about 130 companies, $1 trillion market cap right now, and it's grown about 30% in the last couple of years. And it's growing. So there's a ton of institutional money coming at us. It's interesting. One of our portfolio companies was just taken private by KKR last quarter. It was a French company called Albion, which is a solar and biomass company. And it was basically, they paid a 52% premium to make something public private, which I thought was pretty interesting. And that was the third take private that we've had in our portfolio, in the last year. So, and then finally, obviously more recently, things like energy independence and energy security have become the real focus. So when we what we defined energy infrastructure, renewable energy infrastructure, is wind and power and solar developers and operators. So we don't invest in technology. We think that's too high vol. And we don't invest in manufacturing. I think the margins are getting too squeezed. So we're kind of at the same assets as when you think about our history in MLPs. So we're investing in hard assets with contractual visible payments over time, again, with lower volatility. People like the fact that we do have a little bit of yield. So there's a lot of growth and a little bit of yield for some of the green utilities that we invest in. So we are super excited about the sector. If you take a look at kind of what's going on now, if you look at kind of some of the evolution of ESG 2.0, I think a couple of things kind of happened. I mean, one is obviously global warming. There's no denying it, right? You can't turn a blind eye at things like, once in a decade heat waves, extreme droughts, massive wildfires, et cetera. And so another impetus, and this is going to get to your question about the letter, I think in some ways, is ESG has really evolved in terms of regulation. So when ESG began, I think there were a lot of kind of bad players that were using ESG to fund capital. And I think that kind of has gotten a bad name. We don't use ESG in our name, although we use it in our investment process, because we think we need to invest in companies that have, good governance and diversity and things like that. And so Europe has always been ahead of us in the process. If you look at Europeans, 70% of their investments are ESG screened. And so from a regulatory standpoint, they put funds into buckets, either Article 6, Article 8, or Article 9. Article 6 is basically no sustainability scope. Article 8, promoting of it. And Article 9, it's really the investment objective. And so something similar is going on in the US with they're making an effort for greenwashing, to get rid of greenwashing and some of that manipulation that I talked about. And so they're kind of triggering or tightening up this names issue. So if you have ESG or sustainability in your name, the spirit of what you're doing, the majority of the time in your investing needs to be in ESG or sustainability. So to that end, there are three types of buckets of ESG funds. There's integration funds, which you can co-invest ESG along with your traditional funds. ESG focused funds, which are again supportive of ESG, and then impact funds, which are actually there in their objective is to have a certain impact. And so if you think about the disclosure going forward for that, the ESG funds and the impact funds need to disclose things like carbon footprint, proxies, what some of their activist activities are, et cetera. So I think that's another important thing that's going on. You mentioned there's a lot of scoring, third-party scoring companies out there, MSCI, ISS, S&P, Moody's, Bloomberg has one. So I think you need to be careful. We don't use them because we're bottom up and concentrated, but I think you need to be careful of what they're actually measuring. And then I think the third catalyst is this energy independence and energy security. So back in May, the European Commission passed the RePower EU. And basically what they were trying to do there in result of what was going on with the Ukraine is they were trying to both from a short-term and a medium-term and a long-term perspective, reduce the reliance that the Ukraine has, or that Europe has, sorry, on Russia. So in the short term, they were doing things like conserving, they were doing things like tax incentive for energy saving devices and electronics, et cetera. They were also trying to diversify into things like LNG. And then the biggest part of it really was based on a faster transition to renewables. And so they dedicated a team basically to double Europe's renewable or solar capacity in 3 years. They also put into place some solar panel you need to do from a legal standpoint in certain buildings. And then the biggest thing, which I think is going to be have the most impact, is the red tape of the permitting. So some of these projects, that the solar and wind projects, they take 6 to 18 months. Permitting can take a couple of years. So it seems like a really big thing to double your capacity, but a lot of these companies that we own that develop and operate, they've got a backlog of pipeline, and you could do it much quicker than building per se a nuclear plant. So
that's it. Or do you have a final comment? I'm trying to stick to it.
The other comment is in addition to the renewable strategy, we started to transition some of our MLP funds. So we you have like us with the spectrum. So we do invest in companies that do have fossil fuels because we know their management companies, we know the management teams, and there's too many economics on the table. And if you think about it, a large oil major that's transitioning is going to have a much larger impact than a small 100% green company.
Well,
what's the return on investment of these deals?
For the fund, or
yeah, I mean, what's your target IRR?
Yeah, so high mid-teens, low double digits.
It's a 10-year fund?
No, it's perpetual. It's an open-ended mutual fund.
Okay.
So so the strategy, there's a private strategy and there's a public strategy. So the private capital that we raised, 500 million, that we spun out we did a carve out of that, $30 million of that to do an open-ended fund because we had reverse inquiry for liquidity.
Okay.
If that makes sense.
Nicholas, you're on mute. You go ahead. We'll give you 7 minutes. I hope I'll learn to be a little bit more delicate. Thank you very much, Sarah.
Can you hear me okay, Tyson?
Go ahead. Fire away.
Do you have questions for me, or do you want me to go free form here?
No, just go ahead.
Okay.
Yourself and tell us how to solve this energy crisis.
Thank you for having me. Nick Rohleder, I'm the co-founder of Commodities. A little bit of background on myself. Originally from Oklahoma, grew up in the family that's been in the oil and gas business in that part of the country for about 70 years. Started my career working in the field, learning the business, every manual labor job you can think of that you don't want to do. Went to school for alternative energy technology and ended up for a period of time in alternative investment management in New York, focused on the commodity side of the new energy spectrum. So we set up Climate Commodities in 2019. Myself and a gentleman named Ben Banmore, former Millennium portfolio manager focused in the space at Consultan Commodities, for Louis Dreyfus prior to that. So effectively, what we do, we have two business lines. And you think about it from our ideas that we field operating businesses in this climate ecosystem that do a variety of things, with the core focus being the acceleration of climate technologies on a global basis. So we like to split our business into operating businesses and then risk management and commodity trading. So on the commodity merchanting side, we effectively have three things rolled up into one digital platform: specialty finance, physical trading, and insurance. So we look at that side of the business. What is the opportunity set now to really enable this climate economy? If you're, let's say, a climate technology, you're a corporate, you're a developer, or you're a bank or an alternative investment manager in that ecosystem. And for you to write a check, especially if you have a rigid investment criteria, you need a couple things in your project. You need a well-structured feedstock contract, a well-structured offtake contract. The physical trading piece comes in. You probably need someone to face the EPC or the procurement program with some sort of supply chain financing program, and you probably need an insurance solution to backstop the performance risk of that technology. So we have built that operating business with those three things under one digital umbrella. We've designated within that three specific operators, a lot of experience in that area. The insurance is a former Generate Capital gentleman on the supply chain financing side, career fintech, and on the physical trading side, a lot of our former staff. The other side of our business, we have operating businesses in transportation and logistics, mineral processing and refining, and renewable power. What that basically is, those three operating businesses, and then we've run a series of private equity funds around their capital needs. So effectively two businesses, operators, and then an in-house capital markets team that administers those private equity funds. So our idea is that if you look at the climate economy and how it's going to develop, and I think this is really relevant to what's going on right now, especially in the wake of this drive letter to Chevron, is that you think there's capital gaps and there's service gaps to meet any of these net zero targets. And the way I think we think about this and the idea of building an operating business where there's some sort of residual equity value down the line is, how do you encapsulate the capital markets community and allow them to take risk, right? Through sophisticated contracting, through supply chain financing, through transference of risk from capital markets to insurance markets. And that's really the crux of why we exist. I think, outside of that, and I talked to Tyson about this beforehand, my background is actually in the oil and gas space and still serve on the investment committee of family office in Texas in that space. And, it's interesting with this drive letter, how the global energy ecosystem is being viewed in the path forward. I think that addressing that specifically, there's some very valid points made in that. My childhood dinner table, I sat around people running capital allocation for a Fortune 500 integrated energy company. And some of the things that are in that letter really hold true as to what creates value on the fossil fuel side of the ecosystem. That being said, I think what's not included in there, and an area that we've had a lot of success on the climate commodities side, is really taking traditional energy companies and coaching them up on how they utilize not only their human capital, but also their financial capital to make money in the ESG ecosystem through things, alternative fuels, namely hydrogen, integrated carbon management, and really looking at, one, decarbonizing their own portfolio and making money. I think that, some of the things in this letter, there's a lot of criticism on their adherence and promotion of a carbon tax, but really there's not a deep focus on how Chevron New Energy was Texaco Energy Ventures years ago, really focuses on creating value on an integrated basis. This is an integrated company with the ability to, if there is a carbon tax in a 5 to 10 year period, significantly monetize the decarbonization side of their existing infrastructure. So I think that there are some shortcomings there, but in general, we've had success. And I think that this comes at a period of time where drastically underinvested energy infrastructure globally, global conflict in Europe, global conflict Southeast Asia, unprecedented tensions. I think that the resource nationalism that we're seeing is only going to get worse, especially as we look at a mineral demand for things like electric vehicles, solar panels, the electrification side of the equation, and then just broad line energy security on the fossil fuel side. So I think that what we're really looking at is, how do you transition, like how do you think about rational decarbonization, right, in the context of coming from a traditional energy operating business? And I really think that what the Strive letter hits on, and where we are right now, and what we do as a business is take, for example, a smaller version of a Chevron and say, okay, like this is your existing footprint. How do you start making capital investments today that suit your existing infrastructure to create value, but also align yourself for the future? Like a good example of that, if you're a Chevron or you're a small, mid-sized, private equity-backed E&P, you start thinking about, maybe I have flexible enough capital where I can put a hydrogen SMR inside the fence, right? Work with the trading shop and float that out into the market, right? Like it allows you to simultaneously invest in the maintenance and quality of your upstream assets and get an upside if this decarbonization side of the equation takes off. So, I think that
30 seconds.
Oh, yeah. So the point being there, I've told you what we do, kind of our view on this. And really, I think a lot of the discussion here, it sounds like it's going to be around rational decarbonization, which is a core tenet of our business.
Excellent. Well, Kyle, it's a great bed you have.
Yeah, sorry, I'm traveling, so I'm in the hotel room.
Oh, well, I'm sorry, I couldn't help myself. This is Kyle Fox. She's raised about $75 billion and does primarily debt. She works in the ESG sector. She's a consultant and investment banker with a lot of international experience. So basically, tell us where you see growth and opportunity, and tell us a little about your company and what you see from that perspective.
Sure. So actually, just as a quick sort of clarity, so basically my company is an independent sponsor. So we have the typical GP-LP structure, but the difference is that, counter to Kayne, they have discretionary capital and we do it more deal by deal. So we have certain investors that we work with across the spectrum, but given the size of our deals, we're regularly co-investing with larger investors, and that includes other PE firms who have dedicated capital, as well as pensions and family offices and ultra-high-net-worth, depending on the asset. So we've gotten into investing in ESG type of projects. A lot of it is very infra related. We are supporting solar farm operators in Brazil. We also are doing work with waste energy companies, both in Brazil and in the US. Some of them are focused on landfill, and the one in the US is focused to include as well the recycling of tires, because the black matter in the tires are quite hard to decarbonize. But basically, in terms of our view and what we see, we're of the view that we're going to kind of have to innovate our way out of this. That kind of this micro thing of the recycling and people getting on everyone's case about their private jets and all the rest of it. Like, that's not really going to kind of move the dial. What's going to move the dial is sort of the use and efficiency of hydrogen. There's one deal that we're working on that it's the concept's being proven, but it's another form of hydroelectric. But with this, you don't need to have a dam, and so it's within water containers. So stuff like that will really move the dial, because you can provide over 100 megawatts of energy using this new technology, and it's completely carbon free. You can get tax credits. It's those type of things are kind of game changers. And another project that we're working on is the methanol. I don't know whether that's necessarily a game changer, but it is sort of reducing the carbon footprint of existing methanol production by 45%. Technology keeps improving in the methanol production. Is being used for different types of uses, including marine vessels and to power them versus diesel. So we feel like those type of things are really going to kind of be the game changers. And all these incremental things, they're always good to do. It's good for awareness, but it's not necessarily going to, kind of really stop and pull things back to a more sustainable and stable environment. And so that's kind of what we're focused on, is really just investing in innovative, companies and technology that really will accelerate the ability for us to really make impactful change. We also find it a bit frustrating, let's say with our methanol project, of talking to investors, and they don't want us to use natural gas feedstock, but really it's not economical, nor is it practical to only use other types of bio feedstock for the type of production that we're doing. So that kind of lack of understanding of sort of what is feasible today and still have very strong impact on the environment is a bit frustrating. So for people to understand that it's very circular, all of this stuff, and a lot of it's interconnected, and then moving on to sort of the governmental policies, like the one that California just wrote down in terms of everyone has to have an electric vehicle car by 2035. I mean, if you think about the type of mining and all the things that need to do in order to facilitate that type of shift, it's just not realistic. First of all, the mining production isn't there to facilitate and to service the manufacturing of batteries. Plus, it's a big drain to have that type of push and pressure to do so. And then, frankly, yes, EV cars over the long run are better for it, but you kind of have to get to almost like 50,000 miles for it to kind of start to switch over to be more. So is that really where, California and all their, power and strength and financial impact really want to concentrate on, or maybe they should put a lot of those dollars to funding people, to build innovation, because people who are really innovating really shouldn't be struggling to raise $20-50 million in order to have really substantial, impactful change. And I think money should really be going towards innovation. So that's sort of our take on it.
Thank you. That was
And
great.
Kyle, can I just bring up the fact, Kyle, that most of the energy that powers these battery cars is coal, is carbon based, right? So I mean, it's almost it's a zero sum game there, I think.
Yeah, it's just people like go onto these tags and they're not realistic and they're not really impactful, but it feeds to the headlines and the news media, and California feels good about itself, or at least its legislators do, that they're like putting a stamp on it. It's not realistic, and it's really not all that helpful or impactful.
And my understanding is that 25% of the charging stations in San Francisco don't work, right? So
I don't know about that, but
Okay.
I wouldn't be surprised.
I'm trying to stick to the schedule because I don't want to run over, but Marty, it's your
Yep.
conference. So if you want to give
keep on,
extra time, that's
please.
fine.
Yeah, Tyson,
So
got 15
let's
minutes. Keep
go.
on ripping through.
Let's go to Steve Casey, and then we'll end with Louis Medina. Steve has been working in renewables, is going to talk about infrastructure and how difficult this changeover is, and whatever else he wants. Go ahead, Steve.
Yeah, thanks, Tyson, and thanks everyone for welcoming me here. And I'm going to try to focus on the family office perspective. I work with family offices quite often. I think their views are sometimes the big ones have maybe different views versus small ones, but I think I can maybe give some facts that may be worthwhile, and hopefully provide maybe a little bit different perspective. But I do agree with, I think, the prior speakers in a lot of areas, and I think some of the things they were going to say, I hope I don't repeat them. But my background is the E and ESG. I think we're all focused on E, but we should also recognize that there's an S and G there. But that is not my expertise, so I'm not going to go much further there. But why we should be focused on ESG? That's it's going to take a very, very long time to electrify everything. That's really, I think, one of the main tools that we have to change where we are today, where we're producing lots of greenhouse gases, and we want to reduce those. Okay, so how do we even get greenhouse gases? We get that by burning carbon. So we're burning coal, oil, natural gas predominantly. Sometimes we burn other things as well that contain carbon. But that's really how we produce these greenhouse gases. And how do we measure them? Just to give a little bit of size. We measure them in metric tons. And I think the last data I saw was 2019. I think China let's see, China had 10 million metric tons of greenhouse gases. I think the US was about half that. India was probably third and probably half that. So those are pretty big numbers. How are we going to turn that around when we've got decades of investment? You know, I don't think we can just switch over to electric cars overnight. We can't switch over to green power, but we can do that over maybe several decades or maybe even a century. It may take us a very, very long time. What's that?
Just keep on going.
Okay. All right. So when we look at energy assets, most of them are to get the price down are quite large. They're large investments. So I think if I was a family office, if I was going to invest, I probably would want to co-invest either with or through Kayne Anderson or some other private equity firm or venture firm, because I find it to be a very complex industry. I've been in the industry for 20, 25 years. I'm still learning every day. Okay. And every project I find some sort of nuance that we haven't come across before. When I started in this business, it was quite local. Now with everything is built just in time, small problems turn into global problems. But there's a lot of ways out there to make money. You can invest in projects. You can invest in manufacturers of some of the new technologies that are coming out. We're seeing lots of battery chemistries. Not one of my favorites because I think it's kind of hard to evaluate some of these technologies on which ones will be the ultimate winners. But there are other places like projects, which as Kayne Anderson does, they make a very good return. And I'd argue that most of those returns are pretty safe for years out because of the complex structure in them. And I think there's a lot of opportunities for family office to join in on those projects. They are complex, and again, that's why I'd recommend make sure you're investing with a partner that's done it before. How do we motivate people to invest in these projects? And I think one direction that I look at is what are the governments doing? Where's the government subsidizing? I remember the early days of solar going to investors, and the bulk of the return was in tax subsidies from the government. Okay, sometimes that's challenging to execute. We created some very complex structures to work with it, but those were, I think, some great investments, and the structures have matured. I don't think they've gotten any simpler. But again, I think those are great ways, great projects to invest in, the wind, solar. Now we're seeing storage added onto it, which I think is necessary to make sure you have power when you need it. Tyson or someone mentioned Oregon, where they're turning back wind and hydro. Seems crazy, but we just don't have the infrastructure. I've worked on electric transmission lines because traditionally our power was close to the demand. Well, now if you want to build a wind farm or a solar farm, it's probably 10, 15 times the size of footprint than you did the original, with a couple of gas-fired and coal-fired power plants we can see from the window here. So how do you get that power on land that you need to buy or rent that's relatively cheap? And how do you get it the hundreds of miles to the demand center? It's a transmission line, and that's a whole separate, maybe billion-dollar project. Probably cost you $10 million in 4 or 5 years just to get the right to build it. And then you got to spend the $1 billion to actually build it. So I think these are incredibly complex projects, as I said 2 or 3 times before. I think you really behoove yourself to get advisors and partners that have done it before to get there. And these crises.
To be clear, Steve, you're an advisor like Kyle?
Sure. Yep.
Okay.
Been an advisor for 20 years, mainly on projects, but also strategic advice to utilities, both foreign and international.
And can I just make, because Steve was talking about the footprint. So the estimated footprint to replace a nuclear power plant with solar is 75 times the land area. So a solar plant requires 1 square mile, you require 75 square miles for solar to replace the same. And then for wind, it's 360 square miles.
That's Right. No, it's substantial. And we've seen some very interesting technology applications that were even bigger, where you'd have so mirrors pointing up to a tower. And I think I saw one that was 20 miles square. So yes, they get quite large.
10 seconds.
All right. Well, I think we've got a lot of stuff going on in Russia. Started with the Ukraine war, Nord Stream pipeline. Russia's playing games with us. And I think it will pass. I think even though we have low water in some of those countries to either deliver coal or to produce hydro, I think we're going to make it through. And I think it's going to take a while to solve that problem with more LNG moving around. And I think the other interesting headline that I saw yesterday, that 6 Gazprom executives were killed in the last 6 months. And I find that just interesting. I don't know what to make of it yet, but that's at least a headline that you guys will remember me by.
I heard it was 8. And, you know, that's terrifying. It tells you something about Vladimir Putin. Now, next, we're going to go with Luis Medina, who has a lot to say about energy and investing. And I'm just going to let you rip. Go
Okay.
ahead.
Tyson, before we go to Lewis, I just want to add a little couple of factoids to Steve, which is that there's protest in Prague on energy pricing. We just heard that the cost of gas is 75 times higher in Europe than it is in the United States, or after 7.5, was it 10 times higher?
Right. 10
It
times.
was 10 times,
Yeah.
10 times higher in Europe than the United States. And the government of Italy, was it Draghi, is saying that it was a mistake with what happened with Ukraine on the NATO side. No, because their energy
Shoulda,
prices
coulda.
going through. Yeah, anyway,
Go
Lewis,
ahead,
sorry.
Luis.
Yeah. So my name is Luis Medina. I'm the head of investment strategy and senior wealth manager at CMG, firm based out of Malvern, Pennsylvania. I've spoken on a couple of panels at the IvyFON conference over the past year. Earlier in the year, I made the case where I talked about high level about the early catalysts going into uranium. In another conference, I also made the case where if you look at ESG and redefine it more pragmatically and evaluate the social context and implications of an energy security crisis, particularly when you look at it more broadly as it relates to agriculture, famine, global security, energy security, and implications of that. I made the case where coal, thermal coal, may be, from a social standpoint, a critical application to ESG in the short term, and being able to provide sustainable, or at least diverge some of the energy dependency from Russia and OPEC, right? And being able to put less pressures, particularly as we saw inflation rising, as we saw rates going up, and creating dislocations in energy markets and more broadly. Fast forward, here we are today, and the positions that I talked about in those conferences have exacerbated. And so what I'm going to share at this point is I didn't talk as much about uranium in those conferences, and I'm going to highlight where we are there, because I think I think coal is still critical to providing short-term energy security and a very important social play in ESG from a pragmatic standpoint. I think uranium is really, and nuclear more broadly is renewables, at least at this point, and what I've project over the next 10 years will not be able to sustain the base load energy, for highly dense and large populations. You need to diversify the energy channels, and to be able to reach the zero carbon footprint initiatives from Western social policy, and even where China has signed on that, nuclear is the way to go. The problem is, over the last several decades, we've had several partial meltdowns and several full meltdowns, between Chernobyl, 3 Mile Island, Fukushima most recently, and just so happens that they're usually within 10 to 20 years apart, and it creates a crisis and a sentiment of a nuclear holocaust. And so what ended up happening post Fukushima is Japan wound down its nuclear. Germany, made the case, and Angela Merkel, started talking about, we're going to shut down nuclear, we're going to go full renewable, and it created a lot of consolidation in the nuclear space, restructuring, acquisitions, mines, shutting down operations. And go figure, come 2020, we're now realizing, while there's sufficient uranium in the ground, there's not sufficient energy in the can, or basically stored uranium that's already been excavated. So in 2020, the United States decided to invest and build a strategic reserve of uranium, realizing that we were starting to observe stockpile shortages that would take place in 2021. What we observed in 2021 was that Europe was in a very clear energy crisis, even without Russia invading Ukraine and other dislocations in the energy space. And so in one of the prior conferences, when I was talking about coal, that's where one of the things that I highlighted. But when we talk about post Russia invading Ukraine and the geopolitics tied to it, well, now we've seen, over the last, couple of years, a tenfold increase in energy costs, and stagflation just totally disrupt European security, Western energy security. And so here's what we know about nuclear today, and just a couple of recent updates. Japan, which has more broadly, Japan, US, Germany, Belgium, have all extended the lifespans of their existing nuclear reactors. Countries that had shut down nuclear reactors, particularly France, where there is some corrosion, there are some infrastructure investment spending issues. 70% of France's energy comes from nuclear, but they haven't invested in their infrastructure in 40 years. So they had problems that brought their energy capacity, cut it in half, at least coming out of nuclear. So pretty substantial and increasing energy costs in France, where in France they should have had energy security relative to their other counterparts in not having the same dependency in fossil fuels and renewables. So here's what we know going forward. China currently has 21 nuclear reactors under construction. India has 6, Turkey has 4, and every year for the next 10 years, China is going to initiate construction of between 3 and 6 nuclear reactors every year. We know that other countries, India, the UAE, Russia, the UK, they're also permitting for new nuclear reactors. That demand, if you recall from the beginning, we don't have the deliverable uranium to meet that demand now, and it's going to exacerbate over the next decade as these reactors come online. So uranium currently is about $52 a pound. The average cost for production for getting the uranium out of the ground from most miners is $50 a pound. When the uranium hits about 70, call it $65 to $75 a pound, you're going to see some of these miners come online again. The opportunity is to find uranium miners where they can get their costs for production below 20. So there are some that believe they can get their cost down to $10 per pound for production. And when you look at some of the other factors, given the expected demand and the projected demand over the next decade, you have China, which signed a deal with Kazakhstan for long-term deliverable contracts. It's been a few months since I looked at that data, but I estimated about $81 a pound for delivery, so about a $30 spread from where they are currently. You have companies like Duke Energy and others that are starting to negotiate hybrid long-term deliverable contracts, where they'll pay a fixed rate on half or some partial part of the contract with variable escalators tied to that as the the demand and dwindling supply continue. So I think we're still in maybe the first or the second. I'd probably say we're probably in the second inning of the uranium play currently. It's the only way we're going to get to a zero carbon footprint. It's the only way that we're going to be able to provide sustainable energy. But it's going to take a few years to get there. So we need some other transitions as that investing into infrastructure gets us there. Perhaps it's fossil fuels, as a transition to get us, of course, supported by renewables. But that's, it's the uranium space is a really strong economics case of just supply and demand and the inelastic, nature of uranium that gets passed on to consumers. But it would decrease the dependency on fossil fuels, provide much more energy, greater energy security to particularly for the West and China as they're trying to reduce their global carbon footprint. So I think from the energy space, uranium is probably and nuclear is probably one of the best thematic investors can look at in the energy space. But it's not without volatility. It's not without dealing with some stronger roller coasters because it's not a very large industry relative to fossil fuels and elsewhere. Not going to talk about any securities, but I'm going to think I'm pretty close out of time if not. So
Yes.
I want to make sure that we all have time to
Q&A.
address any questions. So
Go ahead, Marty. Do you have questions? I do.
The questions are, is the US building any nuclear facilities? I think something's happening in Georgia, but from what I hear, it's radically over budget.
Yep. So as with most infrastructure spending in the US, it's generally over budget and it's going to get more expensive for a variety of reasons. Some of it is certain materials that are needed. The cost of getting them to delivery has gone up significantly over the couple of years. So whenever you have plans, no one was planning 2 or 3 years ago when they were getting to permits for further projects that inflation would jump up to where it has, and dealing with the supply chain disruptions and the logistics disruptions that occurred globally. So that's going to exacerbate certain particular budgets, certain safety things that are more prevalent here in the US than elsewhere, will also drive up costs. But there are plans. Go ahead.
Louis, Shishel Manning Shack. I spent 10 years as an executive with Pioneer and Cinerex, and then I just joined DARPA last year. So question for you. When you think about your assumptions on nuclear and the capabilities of the US, if you think about critical material extraction, DARPA is doing a number of work on that with produced water, and then some of these modular nuclear reactor technologies.
SMRs, yep.
Do you think that would change the time frame? And what do you think about that as from your standpoint?
So small modular reactors, I think, are going to proliferate into space over the coming decades. I think they're going to be critical to expanding nuclear infrastructure globally. The challenge here in the US is, the last time I looked at it, we only had one approved design by the DOE. I've spoken with different engineers and different theories about why they think it's equally safe and up to to snuff and to bring it to market. I've heard the case where it still arguably safe, but slightly less safe than other megawatt reactors. Regardless, I think so small modular reactors are generally the ones that produce at less than 500 megawatts of energy, and so when you have there are several that are planned. I don't remember if there's maybe like 1 or 2 where they're creating plans in the US, but they're mostly international. I think that we will come around once we kind of get proof of concept and get a couple online, that they'll begin to expand pretty significantly.
Yeah, the IV3 guys in Virginia. That's what we're doing.
Thank you.
Hey, Luis, back onto the small nuclear reactors. Why is a smaller reactor going to be safer than a larger reactor? Isn't that the issue? Why we're not building them?
So given that I'm not an engineer, I talk to different nuclear engineers and different folks so I can hear the competing theories. But I do think that this, I don't know if it's because it's nuclear that it's taking longer for the designs to get approved. I don't have sufficient data to answer that competently, but
I mean,
I'm not an engineer. I probably wouldn't understand it.
So
I-
I could,
oh, sorry.
I was gonna say, so my name's Peter Thurlow. I'm sorry, I'm just stepping into the conversation. I was stepped out of. There's a nuclear power plant, Indian Point Nuclear Power Plant in Westchester, New York. I worked out for a few years. I was a mechanical engineer, not a nuclear engineer. I was talking earlier today, there's an interesting show of Bill Gates Inside Bill's Brain. One of the 3 episodes talks about and I don't know if you mentioned this, so I apologize if you did, but one of the 3 episodes talks about the new nuclear generating devices coming online. And I think one of the issues is that they don't generate the nuclear waste. For those that are old enough, there's a big debate on what to do with the waste. They decided after years to actually keep the waste at the nuclear sites in the cooling facilities. Yucca Mountain in Arizona was the area that was going to be considered for years to transport it, but the decision was made it was too dangerous to do so. So I think what came out in that show, and then some of the recent research, is that the smaller modules, nuclear, they don't pose the threat that some of the larger ones do, but also the waste issue is not there because, as everyone knows, the waste will be around for thousands of years. So, I don't know if that's helpful or so on, but it's just,
So in really simple terms, like you think about just basic, and it's funny, we talk about this, like every semester, this class I teach at Columbia, there's always a big class on someone gets on nuclear and it goes the whole time, but it's at a base level, it's a smaller core, so it produces far less heat than a larger core in a larger reactor, which is at a very base level. And the other thing too is that because it is modular in theory, the engineering design flexibility that you have with the hardware itself is greater than that of a larger reactor. So therefore providing pathways for redundancy mechanisms that are more sophisticated than a larger reactor. So the actual engineering behind how this is fundamentally safer is not that complicated. I think you still have the NIMBY issue of having some kind of nuclear derivative power generation in your jurisdiction, right? I think that if you want to get to a net zero scenario, like nuclear is a key part of that. How the nuclear ecosystem develops to meet climate targets based on permitting, based on what we've seen in the past, the situation with Georgia Power and the overage, that remains to be seen. But if it is going to be done, it's going to be done through the SMR pathway is going to be crucial if there's going to be a nuclear ecosystem at scale. Similarly, last thing I'll say on this is that you look at the uranium resource. There's a geopolitical issue there, not only in the power grid, but also on the weaponry side too. So there's a myriad of issues that have to get worked out on the upstream materials side of this that really lend themselves toward an SMR program can be run outside of that due to the size, scale, technology versus large scale dependency on that supply chain, and then also just the complexity of putting in service massive capital investment nuclear reactors. We're seeing play out in Georgia.
Yeah, and someone asked, why not solar or wind? Well, if going to zero carbon footprint, those have not been able to sustain the base load energy for large, densely populated areas. And then with respect to liquid hydrogen, it's very costly to go through the electrolysis process for, just the transportation and production costs. Hydrogen is just not readily available in the air, in our atmosphere. So there's significant cost to liquid hydrogen. Companies like Shell, they're maybe maybe 2 months ago, I came across an article where they're going to invest multiple billions of dollars in a hydrogen project out in the EU. But hydrogen is very costly.
Well,
So let me just discuss a point here. So there's a great book by Michael Friedman. He's the guy who founded Stratfor. If you ever have a chance, you should read his first, well, one of his bestsellers, The Next 10 Years, because it was written about 10 years ago and everything he predicted happened. So he's got an amazing batting average. And then he has another book called The Next 100 Years. And his great prediction is solar power plants on the moon, beaming radio waves to turbines in, in the US or other parts of the world. And that's going to create energy in a highly efficient manner, right? Because solar panels are right at about their optimal efficiency given atmospheric conditions, right, today. So there's no atmosphere on the moon, you can get far more efficiency and conversion rates. So China's actually trying to do that now, right? China has launched a whole thing of solar on the moon. That's why they're exploring the moon, et cetera. So to me, that and his argument talks about base load and about how they can just beam energy nonstop, 24/7 to the Earth. So a great book to read, something to give some perspective to. Yep.
Marty, along those lines of space. Oh, sorry, go ahead.
And also, by the way, you can't do space without mini nukes, right? So anyway.
No, the question for you all, so DARPA has a number of things, technology around autonomous, including water. And so I was curious, we always think about infrastructure here, and we think about some of the wave technology, BP putting in turbines on offshore rigs. Do you think from all of your expertise, is that a viable, would there be infrastructure in the ocean to go transport energy? We talked about space. Is that, just curious. I mean, we're thinking about if you could have autonomous vehicles and you could do logistics. I'm just curious what you guys think.
You're speaking primarily to just the maritime technology ecosystem as it relates to energy infrastructure. Is that kind of
Yep.
Okay? So
No,
being virtual, I'm catching every third word. Oh, Kyle, go ahead. Sorry.
I think she was talking about the autonomous vehicles, right? Is that?
Yeah, but thinking about,
Yeah.
Yep.
I mean, look, that thing can be all good. I mean, I have my skepticism that this autonomous vehicles is actually just like another sort of data gathering and monetization of the consumer more than is really great for the, for everyone. But look, I think there's 3 tiers to this. One is invest in things that make sense today, that's doing kind of best of class. Second stage, invest in the future. Hydrogen, yes, agreed, very expensive now, but if you keep investing and keep making it more efficient and better and all the rest of it, that will be a game tester. So then invest in the innovation that will really be even more impactful than what we have today. And I think those are kind of the key things that we need to, and also just, and actually it was your point actually from the family office. I thought that was a really good point in terms of the approval process. So instead of them trying to legislate and control, private markets and consumer behavior from a government point of view, they should really be very efficient in approving projects that make sense, right? So if they're going to hold it up by 4 years, I mean, that's just ridiculous. So, and they need to have clarity in terms of guidance, in terms of what they're willing to support, either from a subsidy point of view, whether it's because the utility companies don't want to be basically giving over their business to renewable operators. And so they only can give X amount of their income out to other revenue generators, and the government, steps in there. So if the government wants to really do something, they should be really efficient about their approval process and understanding actually, what are good projects and not. And I think those are the 3 ways that we can actually start, moving a bit quicker and more efficiently.
Folks, I have to jump in again. I'm turning control over to Tyson. We've come to that agreement. Tyson will be running the meeting for the next 40 minutes. You have to end at 4 o'clock. And he'll be ending this panel in 5 to 10 minutes. Michael Oliver, we're talking about macroeconomics. He's an expert on credit flows and market acceleration and deceleration. We'll be talking about China as well and commodities. Hopefully we'll talk about uranium. So good luck. We're in San Francisco on the 4th and 5th of October. See you then. Thanks, guys.
Right, so we have 40 more minutes. So I got a question for Sarah Gieske. I thought that you said now.
Okay, Marty. Thank you.
Hello?
Yeah.
Hello, Sarah? Did
Yeah,
you
can you hear
say
me?
that the scale with regard to solar and wind now makes it the cheapest source of energy, or did I misunderstand that?
Correct. So the cost of wind and solar have come down 90 and 70% respectively over the last 10 years. They're much cheaper than any other form.
They're cheaper than fossil fuels.
Correct.
Does everyone else on the panel agree with that?
In general, I mean, there's kind of two sides to this equation, especially with energy prices where they are now. Like if you think about the construct of mineral security and electricity grid security versus, you have a process where something is put in place over a 20-year period of time. That's it. The redundancy and failure mechanisms are associated with maintenance, software, balance of system, whereas fossil fuels, continuous combustion, right? So that economic advantage is going to naturally oscillate over time just based on that pure equation is how you calculate that. But yeah, it's generally accepted that solar and wind at a base level, not factoring in challenges with intermittency, right? If you take that side out, are economically advantaged relative to traditional fossil fuels. That being said, that's assuming that you're not factoring in intermittency or not. How this is calculated drastically impacts the output of how you basically articulate this illustrator, right? I think it's really important to note that.
Yep.
Interesting. I have another question. EQT Corporation, their CEO, is arguing today that the fastest way to get to net zero carbon emissions is by basically converting all the coal burning facilities in the world to LNG. And if that's true, and we want to get carbon down faster, why not do that? And that's open to anybody. And does that make sense?
Well,
I
I can
don't
take
think
it. Go ahead.
Go ahead,
Sorry.
Yeah, I don't think it makes sense. You're still going to have greenhouse gas emissions, right? So you're still going to have to do something to offset those.
Well, it's really important to think of. I mean, this is EQT, right? So if you're EQT, you think about size and scale, and then relative to him talking his book, right? So you think about, like, if you're a producer of that size, and you're saying, okay, so what is impactful to go to net zero that also corresponds with my business? That makes a lot of sense, right? At scale, large LNG, stimulate producers in the US, build more liquefaction infrastructure. Like, I don't know, at a high level, it does make sense. It makes a lot of sense for EQT. That being said, I think that, in the context of where we are now and where we have to go, you're converting facilities to burn LNG relative to thermal coal. That isn't the worst idea. It's just, what is that transition period, right? And so, you're going to invest in 30-year infrastructure you effectively are investing in infrastructure that has a like-kind time horizon to when we're supposed to meet some of these targets, right? And at a base level, doing that with LNG just mathematically is not going to meet the targets in stated climate scenarios, right? So, I mean, does it make sense right now in the spaghetti against the wall, see what sticks? This unwinding of ESG, like the math is challenging, but for a producer like an EQT, right, in an environment like this where it's a make your own ESG, make your own scenario, right, assuming that we're going to bend from the mold, I completely understand why you said that.
I think Robert Mueller needs to look at this. Who started to speak?
Shaq again, another question for the group. So, there's a book written called Under the White Sky, and her premise is that you could engineer, whenever we think about climate change as a global change in its nature, and one of her theories is humans have been engineering nature, like with when canals change and the fish populations changes. So with climate change, we're all assuming that all of these operators are going to have to buy different technology. What about some of those people that are thinking about, DARPA, for example, some of their ideas about, putting things in the clouds and having ion changes, or if you think about sucking out CO2 out of the air, do you think that's even viable? Number one, could a company make money from that? Could they be selling carbon credits from that? I'm just curious to some of your thoughts on this.
Yeah, I think a lot of these edgy technologies, some of them are going to make it. Okay, but they may not make it in a broad scale, because sometimes you need some sort of local advantage. Like there may be something in that area that makes it special. Maybe it's a tremendous amount of carbon dioxide, so therefore we can suck it out cheaper. Or there's something to do with the waste product. that you do efficiently. So yeah, I think there's going to be a lot of new technologies that will exist, but there's only going to be a few that are going to be as broad as wind and solar, because I think those are ones that are still maybe at their infancy rather than at their zenith.
There's two sides there. I mean, the geoengineering side of it has been it's challenging, right? Because you're providing a service to the planet as a stakeholder, which it's challenging to think about how you monetize that and how it's going to develop. And some of the practices that are stated out there today, yeah, there's questions around the integrity of the engineering, questions around the business model. It's early days, but there is research being devoted to this. I think that to your second point, what is I think, and we're seeing this, on the insurance side of our business, we've seen people in this area, and Occidental Petroleum is a good example of this. Is that direct air capture is coming around, right? And the first iteration of this is leaning on tax and government mandated tax incentives to monetize the facility. But over the long term, really, I think that to directly answer your question, using renewable energy sources to power direct air capture in a circular carbon economy makes a lot of sense, right? And I think that where we have right now, there's a lot of flash ideas and business models created around the credit you receive for capturing and storing carbon, whereas like where you start to get the exponential impact and where this makes a lot of sense is the actual engineering of understanding how do you reuse that carbon or implement it back into the ecosystem. Because the idea that we're going to just create a massive carbon storage facility underneath the ground, at some point in time, there's got to be some sort of circularity to that. And that's where I think that currently, over the long term, that business model breaks down, because that reuse component, there is research there, but it's not at a point where it needs to be for it to scale to meet some of these stated climate targets.
So this is Peter Thurlow again. I'm a practicing patent attorney for 25 years, but again, I was a mechanical engineer. I actually worked at Con Edison in New York from 1990 to 2000 during the Enron days and electric deregulation and stuff. And like I said, operated power plants and electrical transmission distribution stations. So I wish there was more IP that I focused on in the energy area, because it's such an important area that I'm interested in. I have watched a lot of shows on Nova and other things where they do the carbon capture, and then they actually have shows that I was fascinated in, because years ago, I forget the last volcano that erupted, but it definitely cooled the Earth's temperature by a degree or two. And on the Nova show, it talked about actually simulating actual volcanic explosions during certain times of year to help with the cooling. Now, once you start playing with Mother Nature, the unintended consequences of those things get a little bit scary, and I'm sure there's been plenty of books written about that and so on. But I'm of the opinion, as I see especially the West, as I traveled to Montana last year and I saw all the fires, and as I read about the stories about the electrical grid and the temperatures in California, I'm like, hey, we should at least try something, maybe not on a huge scale, but pilot studies or elsewhere in a smaller thing, to at least do something if Nova and these other technologies are there that makes sense. It may not be perfect, but I think we need to do more as the globe continues to burn up.
Right.
And Nick, if you're in Columbia, I got to buy you lunch so we can talk. I know Oren Hershkowitz and others doing a lot of great things on the tech transfer group. Are you a professor up there?
Yeah, so I teach in the climate school as an adjunct.
Okay.
It's a great side gig, but no, it's fun. You meet some awesome people, and but it's to your point that like a lot of the course I teach is on life cycle assessment. There's a pretty heavy basics of material science focus, and like it's interesting when you get people who like have like really interesting moonshot ideas, and what they'll do is profile technologies that are so far from coming off the bench. But it's interesting to see how that develops. And you brought up an interesting point. I mean, from your background, you probably attest to this, is that the electricity grid was built in the public works, so we're at such a rudimentary level of infrastructure upgrades, on the first. That's problem one, right? Especially in the Western United States. And I think it's problem two, and speaking again to electricity markets, there's an interesting point you make, is that I think someone commented about hydrogen, but you look at MISO power market, which basically goes up the gut of the country. The curtailments are unprecedented due to the massive amounts of solar and wind that have come on the grid, especially wind, that are intermittent, right? And like on the hydrogen side, that technology will get there with mass manufacturing, very similar to solar electrolyzer side. And it's interesting, you know, if you think about the future, you know, with liquid hydrogen being the use case, so you put liquefaction equipment on something, the cost goes up dramatically. But what if, you know, you think about the idea of how you aging electricity infrastructure, fires, environmental risk going up, like you really lends itself to digitization, decentralization, decarbonization. And that, you know, is achieved by something like this MISO issue, for example. You know, why not attach, instead of energy storage, like traditional battery storage, attach an electrolyzer component to orphan wind generation that's getting curtailed and sell that hydrogen into an industrial complex. You know, you think like, I mean, Michigan, Wisconsin, a lot of these states that used to host and still host traditional manufacturing and have industrial decarbonization issues. There's a direct play right there where you can, to a certain degree, circumvent some of the electricity grid challenges and still have something that's impactful economic. That actually solves a problem, right? So, you know, I think I wanted to make that point earlier, but you know, to your point of balancing what we do now and when does the moonshot technology come in, it's a really hard thing to do, but there are little things that we just haven't taken steps to address. They're so critical.
Okay.
Well, and also to your point, Nicholas, that in terms of the, you know, with the EV batteries and hydrogen liquid immersion, like instead of everyone be like EV cars and the current technology, and this is what we're going to bet the bank on it. It's almost like if we were like, I don't know, 100 years ago and be like, coal is the savior for the rest of us, put all our infrastructure and innovation money into that. Like, you know, like we have current technology, there's more better technology coming. So we shouldn't just be like, this is the technology that we're putting all our resources and legislative power behind when it's very, you know, very inefficient, and it's a good solution for now. And it's a good way to sort of migrate into and transition into other things. But I think it's a mistake, you know, to have that mentality when we have so much better technology coming along the way, and to use all of that volume towards kind of older technology is not a good idea, and not a good investment and use of funds.
One more quick comment for me, because I get excited with the energy area. So forgive me. I think Sarah said before, I actually didn't know that solar and wind power was less per kilowatt hour right now, based on developments. But, you know, right now we're in New York City and 40th Street in Midtown. And if you look out the window, you see all the new facades that Vanderbilt and everything that's built on the west side. Everything is generally glass. There's a lot of technologies that are taking they're acting like solar rays that actually take that sun power and convert it into electrical power. We can't look at those as supporting the entire base load that we all focus on, because that was something we focused on at the time. Indian Point nuclear power plant supplies 1,000 megawatts out of the 10,000 megawatt load in New York City. Now it's probably double that. But if we look at it from a segment standpoint, if you look at the West Side yards, the Hudson yards, and all that glass over there, if you look at it more from a power generation standpoint rather than just a reflection, there's power to be had there. And on the solar and the wind side, no one wants those windmills that we see around the country, you know, not in my backyard, the whole NIMBY thing. But if there's ways to do it along our skyline, or especially with the solar panel and so on, there's definitely more ingenious ways than I think as the city planners and as Nicholas was saying, if we were built a new city right now, we would build it differently than it was built, but we have to continue to build on what's been here for 250 years. So thank you for allowing me to speak like this.
You should look into building integrated photovoltaics, because that's considered one of the you know, that is rapidly, if you look at where some of the research dollars are spent, and this is the business case behind, that's rapidly coming up the bench. And specifically, you know, US, you have there's a big push here just because First Solar is located here, manufacturing is here, to focus on cadmium telluride solar, which you think about traditional solar versus cadmium telluride. It's, you know, you have 3 or 4 processes, polysilicon, or the crystalline silicon. You know, if you go to one of First Solar's facilities, it looks like a 3D printing warehouse effectively, right? So, and like the sheeting you can do with that actually makes it to a point where there's a case to be had of perhaps CAD-TEL BIPV in the next, 10 years or so. And to your point about, re-engineering a city, or, in New York City has local law 97, which is the most aggressive energy efficiency laws out there. So, I think that will come around, and that actually might come around sooner rather than later.
Yeah, I did hear that. I haven't studied that, but friends that are still in the business told me it is very aggressive and they have to upgrade the facilities to meet that. So I need to learn more about that.
Local 196.
And
Yeah.
if you're in the commercial real estate business, you have, on the, I mentioned investment officer at this family office. That, they do a lot of commercial real estate just based on the oil and gas book of business, smooths out some of the revenue, and that it's a very thin business, right? So like if you can get anything you can do to cut expenses, it's actually a pretty advantaged solution for that area.
Yeah.
Are there any final comments? Maybe we can go around and wrap this up in the next 5 or 10 minutes, and then Michael Oliver will jump on. Sarah?
Yeah, sure. So I'll give you a best idea. I didn't really talk about it. So some of the traditional MLPs funds that we created have gotten banged up in the market since 2008. The closed-end funds are leveraged, typically 33%. So in 2008, when all the energy tanks or all the energy stocks tanked, there was a lot of forced selling, and they just got beaten up super bad. And so since they're closed-end funds, we don't know who the holders are of them. So and we've transitioned those funds to transitional energy and some of the companies that we hold in our alternative energy strategy. And we love those companies, but for some reason the market has kind of orphaned them. So those are trading at 15% discounts to NAV.
And what kind of yield comes with that? I always find the combination is
the yields, the low teens.
So you can go to your website. Yeah, I think you can get like a 12% yield and a 10% discount to NAV. And in my opinion, that's great. And since some of these are more forward-looking in terms of the types of companies that you're investing in now, it's good for retail investors who are interested in some income and participating in energy and next directions there. Steve, what about you? Any final thoughts?
Sure. I think the real answer is it's going to be a little bit of everything. We're going to get some interesting, window technology or siding technology. We're going to get much improved battery technology, maybe using ultra capacitors or something like that. There's turbines in the East River right now. They're only producing a small amount of energy, but maybe there's more ways of
next to Ravenswood Generating Station.
Well, I think they're connected to Ravenswood, but it's independent.
Yeah.
Wave technology, we really haven't implemented it, but there's probably something there. I don't think it's going to be a problem. We're going to get more and more efficient getting things from offshore to onshore. So I think it's also maybe some conservation along the way. I think that's something that's quite often overlooked. I think we especially in the United States, we're probably a little piggish on our energy. I live in Connecticut. Everyone's driving, a big engine BMW, Mercedes, or an SUV. And is that really the right thing to do?
Nicholas.
So I guess, last thing here, because now we're running short on time. Our business effectively exists, and I think that my long-term thesis on this is outside of alternative energy and just in general. If you look at any raw material that we use right now, where I am, how we're interfacing, conference room you guys are in. If you index the demand of any material, throw out a bank projection, index it to world population growth, add a supplementary variable, how many of those people are consuming like we do in the West and developing world, we're going to run out of every basic material, right? So I think that, the why we exist as a business and where we think we can add value is as this balance between sustaining life, material stress, and then material stress and opening up new markets for materials critical to some of these clean energy technologies. There's an interesting case to be had there. I would encourage everyone to think about just in your day-to-day, how much you consume, what the materials that are going to that, and think about if we were to start to run out of that, the crux of existence and any transition exists on materials alterations that will sustain us going forward and circularity. And I think that's really overlooked in a lot of these discussions around climate.
And last but not least, Kylie, do you have any final thoughts?
So she's not on the screen, although I did hear her speak. But
Kylie?
uh,
She made.
not sure if she had.
All right, well, I think we're gonna move to Michael Oliver. I want to thank.
And
the
Tyson,
panelists.
if I could just jump in 1 second, this is Peter
Please.
Thurlow again. So I think everyone met Miss Shashil Manning from DARPA SHAC. She spoke early this morning, so I'm not sure if everybody on this panel had the opportunity to listen to her presentation, but forgive me for speaking for you. But one of the areas that she focused on was the climate change. So without speaking for you, I'm sure at least Nicholas and the group would be good to follow up with her on some of these initiatives, because it sounds like Columbia is doing some great things, and only one person with so much information would be good to get feedback on some of these developments.
We very much like to follow up. We just had, we were talking earlier also about recruiting top entrepreneurial talent, and we were really fortunate. Barbara Berger, who ran Chevron Ventures, ran downstream. She just joined our team to help on this. And, again, DARPA, we're trying to do things that are really focused around the DoD, and we think about going to different parts of the world and energy needs, and then thinking about, the social license to operate. So I think we're really excited about this work. We have a couple of really cool projects that love to get your thoughts on, and kind of hear some of your ideas. Again, it's really important to think about how we transition. We talk about the energy transition, but DARPA, we talk about the transition of getting technology into the hands of our DoD as well as the commercial markets.
And then everyone wait for the next volcanic, man-made volcanic eruption there. So we'll say it all started here at Post Nelly in New York.
Yeah, that's right.
All right, thank you all.